What's up, guys? So in today's video, we're going to focus on NASDAQ and US30. So make sure you pay attention because I'm going to take you to my chart, all right, and show you what NASDAQ and US30 top-down analysis. You will learn how to do your top-down analysis so that you can apply it whether you're trading NASDAQ, US30, or any currency pair you are trading, okay? So make sure you pay attention. I'm going to take you to my chart and show you everything, all right? So let's jump into my chart. All right, guys. So right now we're on my chart. If you take a look at this, we are on what? NASDAQ. Remember, today's analysis is focused on NASDAQ and US 30 top-down analysis. So I'm going to add, a Jala to it. So I'm going to also do what? USD JPY. Okay. So make sure you pay attention and observe how you do. We are on what? NASDAQ as of now. The first one you're going to be targeting is what? NASDAQ. What do? You mark out your key zones. You mark out your key zone. In this case, as you can see, watch what I'm doing. I'm going to draw my key areas where markets have, we have seen support and resistance zones. So that is what you need to do when you open your chart. You start to mark out key areas where markets have reacted before. Okay. So just as you can see, you see the way I draw my own. That is how, remember, it is considered as an area, not a line. Okay, so that is what you do. As you can see here, you see this region as well. Okay, having established this zone, then you can be able to go to daily time frame. Remember, we are not entering in this area. We are trying to map out key zones that the market have reacted. Okay, that's what we call top-down analysis, to be able to see the bigger picture. Because at the end of the day, it's still a longer term trend that will determine the short term, market fluctuation. All right. So having established these are area once market reach you need to pay attention. There is one thing I also want to show you here. If you come back to daily time frame, we should be able to understand that okay, there's what we call trend line. If you pull your trend line, you draw it from here down here, so you'll be able to establish the fact that after this market head down to this place, market breakout, now you're coming back to retest this trend line from what we are seeing here. Then if you come to, let's say, daily time frame now, then you see the trend line here. Okay, then I'm going to expand it. If you expand it, you see okay that the market, if you draw another trend line, connect it from here to this zone. So what this is showing you is that these are areas that once market reach, if market is coming down, for instance, if you reach this zone, say this is a support, so you expect to look for buying opportunity. If you reach here, either it's breakout or sorry, so or market, you just look for the key areas where you are looking for opportunities to enter a trade. Okay, so if you take a look at it, you see that market break out of here on coming to this zone, then the market bounce back to this region. Then but daily time frame, you are not expected to enter your trade except say you are a very long time you are managing a bigger capital, because your stop loss will be very wide. Okay, so we use this daily time frame and weekly time frame to take a look at higher time frames to see what is happening. So watch this. Since we are not entering our trade in that region, then I want you to pay attention. If you see here, you notice that the markets have break out of this zone. Are you getting it? Then what do you do? Because considering the fact that the market is here, what do you do next? I want you to pay attention because you are going to be learning it. So if you take a look at it, if you use this, if we put this here, you notice that here is also a support level. So if this market is break down and start coming down, here can actually be a possible area where the market will touch. Are you getting me? So market can actually come down to touch this region. Are you getting it? Then moving forward, because we are not entering our trade in daily time frame, so you need to go to 4 hours time frame. If you go to 4 hours time frame, then you'll be able to see, okay, remember you have already marked out these zones, which will help you to understand, am I going short, am I selling, or am I buying? Are you getting it? Then if you come to this zone now, you'll be able to see, okay, if we're able to draw something like this, you see this trend line, market touch here, break down, then come back again, come back the third time before you start heading in. I want you to observe something. Let me see. So right now, what should you do? If you take a look at here, you see that these are the zone. But let me delete this because I use this to establish a trend line in a higher time frame. For now, let's just remove it because I want my chart to be as clean as possible. You don't need to put a lot of things on your chart so that you don't get confused. Okay. So Having established this fact, I want you to take a look at this. You see that here is a support. As you can see, you notice that here is a support. You see markets come here, then moves up, come back here, bounce up, come back here again. But if you notice, you see that now is giving you lower high. Are you getting it? This high, you see this high, this one is lower than this one. Are you getting it? Then there is tendency for you to break it. Remember, in daily time frame, markets have already break. As you can see market have break this trend line. Are you getting it? But you are not going to enter your trade in this time frame. As a result of that, you need to go to smaller time frame. Also confirm if you are meant to enter, if you are trading breakout. But as you can see here, market is at the support. So you know market open on Sunday evening, this Sunday night. You are not expected to just sell since you are not trading in, you are not looking for entry in this time frame. So what do you expect to do? Because here is a support level. Are you getting it? So you expect for market to break out of here. But what I'm seeing here is there is possibility for this market to bounce back to this zone. Are you getting, before it breaks out? Are you getting? So for now, you need to wait because you are not trading in a higher time. But if you are trading in a higher time frame, then you can be able to enter in a daily time frame because you already see a breakout. Because if you enter, then your stop loss will be here. Are you getting? Which is very high from here for it to here. But if you are the type that trade in a smaller time frame, then you need to wait for this market to break this resistance. Or if you are buying, although as you can see there is high possibility for this market to break down. Are you getting it? So buying, the only thing, if you buy here, what I can do if I'm buying for this, I will wait. Maybe if I see maybe this market come down and come back and break here, what is what you call false breakout because of this or this zone. If I see false breakout here, then I can be able to place my buy, come back here and buy. That is what I will do. Watch this. If I see a false breakout, then I will come back here. Let's say this market, when market break opens, when market opens on Sunday night, then it break, come down here, come back and close here. Then I'm going to enter, reference my stop loss just at the week. Are you getting it? Then take my profit here, where I will just capture something like 1:2. Once I get 1:2, I will get out to come back to this trend line because I believe this market is going to come back again. Are you getting it? That's one of the scenario. But as it is now, I may not enter because as you can see, it's giving you lower low. Are you getting it to this support level? So there is high probability for it to break. The only time I will enter, if it break below here, come back, then I will capture this move, wait for another opportunity to sell because this market, I believe, is going to go down. But always wait for market to tell you what to do. That is what, if you are trading a smaller time frame, just like this, you can also connect here. If you connect here to here, you see it. So if this market give me a false break, come here, come back and break above here, that is when I can be able to buy it. But for now, I will not be selling immediately because higher time in daily time frame is telling me to sell the breakout of this trend line. Are you getting it? But I'm not going to say it because it's of this support if you are doing what trading in a smaller time frame. Are you getting my point? So I want you to get the concept. If you are trading a higher time frame, there is a way you approach the market. Let's say, for instance, remember we are still on 4 hours time frame and say this. So if we move further, let's say we go to, let's say, 1 hour time frame. In 1 hour time frame, don't be confused. You see in 1 hour time frame now, what are you seeing? What are the pattern that determines my entry? All right. So that is one thing you need to pay attention to because what we will just do, we have top down analysis. With top down analysis, you'll be able to identify your area of value. From area of value, you see then your entry trigger. All right, guys. So right now, let's take a look at what US. Now we are on US30. Remember, I said I'm going to do a top-down analysis on a lot of them. So let me kind of quicken my approach so that you'll be able to finish up without wasting much of your time. If you take a look at this, we are on what? On US30. US30, as you can see market, the way markets pull back to this level before we expect it to keep heading higher. What do you do again? We normally do our top-down analysis, then whereby you'll be able to identify key zones. As you can see here, you see these markets have reached this region and reversed before now. Okay, then you mark out this zone. Let me extend it. Then if you mark out this zone, the same thing here, you do the same thing again. You come here. All right. Same thing here. So having established it on what, on daily weekly time frame, then we should be able to go to smaller time frame to see what is happening. But let me show you something in daily time frame. You see the way we are analyzing this, you'll be able to see that okay, there's a time during COVID-19 when we see this market meltdown. You discover that if you connect here all the way up to this zone, because you need to pay attention to there. This will tell you that this market ordinarily is coming to retest here to give you the touch. Are you getting it? Because market touch here the first one, touch here the second time. So it's coming back to this region, okay? But how do you approach it? Because we're already on weekly time frame, then you come back to smaller time frame following it, which is the daily time frame. Though in this case, daily time frame is still a higher time frame. Are you getting it? So right now here, you see what are you seeing here? You discover that here is also a zone where the market break out of, because if you put this and drop it at this region, okay, I think we already have something here. Okay, if you drag this, are you getting it? You discover that market just break out of this zone. Market just break out of this zone. Okay, so this is a very good setup in daily time frame. Okay, market break out of here, but what do? You need to wait. You wait for a pullback. Okay, it's like the pullback have already occurred, because as you can see here, as market break out of here, it pull back to this level. So this is more like a trend continuation, but in this case you need to wait. Market, I believe that when markets open, this market can actually keep heading higher, because you see. But let me see this. You see, one of the things you can do, you can use your Fibonacci. Then by the time you draw it from here, take it to this level. Okay, it nearly reach, but not really. So at this point, you see that markets come to this level. You need to pay attention. If you are trading, let's say in 1 hour time frame, you see this is what to expect. You can come down here. Remember, if you connect here to here, okay, let's use this. All right. So for me, let me delete this did not match. Remember, when you try to connect your trend line and it's not, matching the way it's supposed, because it's too steepy, a bit slopey. It's too slopey. That's why I did not want to continue with that. So as you can see here, you see here now, you will notice that as markets come back to touch here, if this market pull back to this level to give you second thought, that's when you look for another opportunity, because in a higher time frame, as you can see, you see that the market have already break out. In this case now, you don't jump, don't chase the market, don't chase the market. You don't chase the market, because markets have already break out. You start from here, start enter, the next thing start pulling back. So wait until market pull back to this level again. When market comes to this region, that is when you expect to enter. When market comes to this level, then gives you a selling signal. When market comes to here, when you see a selling signal, that is when you should be able to, refresh your stop loss and target all the way to this trend line. The markets open from next week. Okay, next week, you see it. So wait for now. You need to know when to wait. I keep saying this, you need to know when to wait. All right. So you see here, when markets come back, you enter. Market pull back to this level, then you enter, hold your trade to this level, which is you give up to 1:5. Okay, if you do it the right way, that's how you're going to be approaching US30 on market opening. All right, know when to wait. Okay, so as an addition, we are going to go to what? Go to USD JPY. So let me go to daily time frame. So in daily time frame, you should be able to see just like I mark out in the other zone. Remember, we are now on what? USD JPY. So just the same thing I did in the other one, but in this case, I've already mark out some of these zones. So let me delete some things so that you'll be able to understand what I'm saying. So if you take a look at here, you will see that I have been able to mark out these zones. These are key zones that you need to mark out your support and resistance level, or areas of value where you'll be able to be expecting the market to either reverse. Okay, so the same thing I did in the other one. You see markets, how do you know that this is the zone? You see how markets have reacted to that level. You see here, markets come here, bounce back. The same thing here. Are you getting it? These are the zones that I connect this. By the time I do that, then I'll be able to, this is on what? On daily time frame. Then I should be able to go to higher, to 4 hours time frame. In 4 hours time frame, then I'll be able to see, okay, what is happening there. If you see here, you notice that the markets have also reacted in this zone, so this place automatically becomes a kind of a support. After market breaks out, support can also resistance can also turn to support. So what do you do here? If you take a look at this, discover that you can connect your trend line here. What do you do from market opening? If you connect your trend line from here, you should be able to see, hey, markets have break out of this zone. You see the way I'm connecting it. If I connect it all the way to this zone, so with this now, you see market break fear to this level and come back. Sorry, let me think. So as you can see here, see the way market connects to this zone. Are you getting me? Then right now, you see that here markets come to this support. You see here is a support, then touch it and start reversing. What do you do? Remember, here if you are trading it, know that you are trading a smaller time frame, and when you are trading a higher time frame, in a smaller time frame, now you discover that you cannot just jump into this trade until you come back here. Let's go to, let's say, 1 minute time, okay, 1 hour time frame. If you come to 1 hour time frame, what do you do? Because you have already established these zones, then you can pull your Fibonacci, connect it from here, then down to this zone. Okay, have you seen it? If you connect your Fibonacci, let me delete this Fibonacci and show you something. I want you to see this. If you pull this, you see that if you connect here, we are seeing a kind of a downward trend line. Are you getting it? Then the next thing you do, because the question is, if you are a beginner, one of the things you can do, you will say this is a support, resistance. If this market is pulling back, this is a resistance, which is quite true. Okay, but remember we have this trend line here, so there is tendency for this market to come back here. There is also tendency for it to reach here and just reverse. Are you getting it? So if you just come here and put pending on, that market reach, and the next thing keep heading up, keep heading up. So in this case, how do I approach it? If it is me, just like I'm the one analyzing this market now, let's say I'm looking for entry, what I will do is this. As I connect this line to this line in a higher time frame, I already know that this is a breaker, even though he hit a support zone before it starts moving up. Then what one of the things I can do is to come down here. I will then, after I connect here, then I'll collect my Fibonacci. Then from this push all the way down here. So see, from my experience trading JPY, one of the things I expect this to do is that since here is a support, a resistance level, and we have 50% retracement, this market may possibly come here, all right? Then it's going to drop again, come back to this zone, then probably pull back to touch this thing before it drop the main one. That's one of the things that can happen. Or it may just come straight to here. When it touch here, then it starts heading down straight. But mostly, in most of the cases, if you reach here, it's going to pull back a bit, then come back to respect this line, then before you drop. So in all cases, what you need to do is that before you enter, make sure that these markets have reached this either 50% or 20 or 0.69, which is 60% retracement. Okay, so this zone, don't just consider only this as a support, also wait for the market to reach this level, because if you're able to enter here, market drop, reach here, coming back, you may just, as market move sideways before you drop the main one. Okay, so after here, I'm expecting the market to pull down. If this trend should continue, then this market may probably come down to this level again. Okay, or it may just come back here, then come back and break above here. Always wait and expect. Okay, know your entry signal. Are you getting it? Here is just a kind of area of value. So then if market reach here, you don't just enter blindly. Make sure you meet your entry criteria before you be able to execute. If you find value in this video, don't forget to click the subscribe button and also click the like button, so that you can be able to reach out a lot of people who are looking for how to do their top down analysis. I believe this video you can watch it and watch it again. Okay, so that is it for today.